And it looks like we may, let's see. And it looks like we are live. Hello, folks. Welcome. Sorry for the confusion. Welcome to the show here. Let's see if we can get this screen straightened out. That is a live view for you right now of Nauset Beach on Cape Cod. A beautiful morning over at Nauset Beach. And let's see if we can get this my picture of myself up on the screen here. As we enter a new week of trading, hopefully a better week than last time. There I am. And you're going to see me right now. There I am, coming up on the screen for you today. And we are coming into another week of trading after a really ugly week last week where we saw essentially us retest the lows of June, right? So if we pull up the screen here with the major indices, we can see a little rally in the NASDAQ this morning. Not much, up 7 points. We saw yesterday when the markets reopened on Sunday night at 6 o'clock, we saw the NASDAQ kind of do a little bit of a it tried to sell off, and then it sort of rallied back. You can see it here, the action here from last night. You can see it open down here right at this spot. Let me see if I can close up here. Zoom in, so to speak. Right here at this spot, you see it sell off, and then it rallies. Then through the night, it kind of like didn't really make it, but you can see this spike at around 3 in the morning, rallies again, and now slightly up on the day again. So, it's been a story of a market that's been grinding lower for some time now, right? Let's back up to 180-day view of major indices, and this really is the story of the markets here. This is, I guess, that looks like, 2 months? And you can just see us just grinding and grinding and grinding lower. And it's been a frustrating, ugly ride for most people because, as you probably know, most people who are involved in financial markets are long stocks, right? So for most people, this has been an ugly, ugly ride. Now, certainly there are people who, out of the millions of people out there who are trading, there are people who were short this and made tons of money. But the majority of people are pretty frustrated by the sell-off in the market here. And I count myself among them. For most of the time that I've been trading, I haven't really been very directional. However, in the last couple months, I've tended to carry a long delta looking for a little bounce in the market, and it really has not worked out well, especially in Squarespace, which has been one of my main positions here. You can see the price action in Squarespace since August 1st is essentially just straight down, and that hasn't been it's been devastating for me P&L wise, and it's one of the reasons why you probably haven't seen me around that much online, because I was getting crushed a little bit, right? Meanwhile, let's go to the VIX. Now, we don't hear about the VIX all that much on the mainstream, quote-unquote, mainstream media. However, when we do hear about the VIX, it seems people grumbling like, oh, the VIX hasn't moved high enough. It's only at 30, and it should be way higher. Well, VIX today, interestingly, you can see it up 180. I'm right in the way of my watch list here, so maybe I can move myself, or I'll move everything else over maybe just for a second. The VIX, you can see it's spiking here, and you might ask yourself, well, why is the VIX spiking up a 0.80 when the market is basically, E-minis are only down 10? Why is the VIX up 180? This is going to be due to something that we call weekend effect, which is a kind of calculation anomaly that happens with the VIX when due to the fact that it tracks trading days versus actual days. So we see this often where the VIX will show down on a Friday afternoon when, all things being equal, with the market not moving, the VIX often will show like a retreat down in a lower price on a Friday afternoon and then a higher price on a Monday morning, just due to this sort of tracking error due to the formula and the weekend affecting it. We call it weekend effect for that reason. So, but interesting how the VIX is up almost 2 points with the market not moving. And also interesting that we're finally over 30. When we look at the price action of the VIX, we can see it's pretty much at the highest level in a while, right? And a lot of this is due to the fact that we are kind of at an inflection point here, right? As I said earlier, we're testing the June lows on a lot of these issues. So let's look at the E-minis here. And when we go back to June, the low is 36.39. You can see here. I'm going to move the screen back to where it was, so it looks a little normal here. So we haven't broken through that level yet, but we're close. We're 36.99. This is 36.39, so pretty close, right? Let's go to the NASDAQ. NASDAQ futures, 11,377. We did get down to a little bit lower than that, but you can see the June low, 1168. So haven't reached that here either. And this is going to be a big thing in the psychology of people in the market. Because remember, although about 80% of trading is done by computers at this point and algorithms, the people pressing the buttons in the end are emotional human beings, and they are affected by things like this June low. And so the question is, do we bounce off the June low, or do we go through it and go way lower? And that's kind of what is, in my opinion, popping the volatility at this particular moment, right? We've had a lot of sell-off, right? It's sold. And when I think about the stock market, I think about it being mostly a bunch of rich people's money that's just sitting there and that they're never going to move, right? That's the vast majority of the wealth in the stock market. The price action we have is a minority of that, and the sellers are going to run out of stuff to sell or run out of steam at some point, in my opinion here, and we're going to see a rally again. Not to mention the fact that people have money coming from their paychecks every week that they need to put somewhere. People have auto deposit for their 401k that goes into the market every week. So that's a steady trickle of money into the market. Also, people from other countries see the U.S. as the best place to park their money. So we've got money coming in from other countries all the time. And thus, the people withdrawing money have to overcome that steady flow of money coming in before we even go down a little bit. And if a few of the sellers just disappear or lay off, then all of a sudden we're rallying. So we should look for a pop at some point here, as we have had just a steady sell-off for some time now. And this is a pretty amazing price action. For years, the market just seemed to be going straight up, right? Since, let's take, this is a 3-year, but you can see just a 3-year, 2020 straight up the whole year, right? Boom, the whole year straight up. 2021 straight up, the whole year straight up, right? Until 2022. And here it's just the opposite, right? And it's been a rough ride for many people, including me. Now, go figure, this whole time we're rallying like this, I'm not long, I'm like flat. And then finally, when I decide to get long, of course, we go down. That's kind of like Murphy's Law here. Anyway, so to get back to it, my current position is in Squarespace, and I'm long Squarespace here, looking for some sort of a bounce here. And like I said, it's been ugly, but that's kind of where we are on that one. Those who have been following me for some time will remember me trading GameStop for a long time. Now, GameStop, not really doing too much for a while now. Certainly, if you were long this, you're not killing them. I'm still of the opinion that this is going to grind lower over time, but it's sort of taking its time. If we do go to the VIX here for a second and take a look at that, let's pull up the VIX term structure. And we can see that the setup here is what we would call inverted, where the price of the VIX is higher than all the futures at the moment, right? So we are in a elevated volatility situation at the moment, and that's not showing up on the screen, so let me see if I can get it to show up here. There it goes. We are in an elevated VIX, an elevated volatility situation right now, and we're going to have to wait and see what happens. Not only is the VIX higher than all the futures, but you can see we are in backwardation here. This is what this is when you have the futures, the front month future higher than the second month, it's higher than the third. That's backwardation. So in effect, most of the time, your VIX products would be decaying. This is doing the opposite of decaying right now, right? We're in backwardation, which means that we are in a little bit of a panic here, right? And that's due to us approaching these June lows once again. So we'll see what happens here. VIX 31 is not like the highest the VIX has ever been by any means. Like if we pull up a chart of the VIX here, we can see kind of where we are. Now, usually when in backwardation, this is not a bad spot, in my opinion, to look to maybe get short some sort of volatility product, because you can see when you look at the chart there, you see that the VIX is at a recent high here. Now it's all going to depend on what the markets do from here. If they break through the June lows, then the VIX could move higher. However, it seems like it's just been all bad news all the time. Now, the recent down move coming on the heels of the Fed rate hike last week, which was the talk of the whole week. And now kind of the news is out. The Fed is saying that they're going to have to be more and more aggressive. They took a very, what they call hawkish stance, that they're going to, continue to be aggressive at raising rates. And so it's been all bad news all the time. And a lot of times when you have just bad news, you get some sort of relief coming off of that. So that's kind of what I'm looking for now, is some kind of relief coming off of that. The market looks dull today, right? NASDAQ, E-minis not doing much. Market looks dull. There's an old Wall Street saying, never sell a dull market. So we'll see if maybe we'll just kind of look to kind of just fade upward. Now, when we look at the VIX is not predictive. The VIX term structure is not predictive. It doesn't predict anything about the future, but it is not in a good state right now, right? We're in backwardation, we're inverted. The market is highly spooked. So that is a signal to be careful out there. And, the key right now is to hold on to what you've got. You don't want to give up all your cash. I personally am long this market because we got to go up sometime, right? Best of luck to everybody. I appreciate you coming on and checking me out. It's been a slow month for the channel, but we're looking to turn things around here, and we're looking to turn things around P&L wise, more importantly, and get things back on track here. So there you go. Best of luck trading to you. If you have any individual topics you'd like to talk about, you can leave them in the comment section below, and I usually respond to everything that people leave. Just long here and looking for a little rally, a little relief rally in this market that's been so ugly for a long period of time. Thanks for checking it out. Best of luck to you, all you trading, and I'll see you in the next one.